Hi everyone. Welcome to today's topic. And today we're going to look at strategic and tactical asset allocation besides the other regular features that we look at. We look at the factor performance and the sector performance for the week. So let's move on to that very quickly. So no factor is now in the green this week. Values are down. Small caps are taking it a highly volatile asset part of the equity space. So they are going to take it on the chin. So down about 7% for the week. Value still down about just about 2%. Year to date, small caps are down a massive 15%. Momentum down about 6, same as the market. Uh, Quality is down about 4%. And value is the least down at about 1%. No major change in the factor trend. Also, value still remains in an uptrend, while all the other factors are in downtrend as they've been for the last 3 weeks. So no surprises there. Let's look at the sector performances. And again, I think interest rate sensitive after the surprise policy announcement last week by Governor Das. I think reality has really taken it on a big knock, down about 8% for the week, uh, followed by others like auto, banks, metals. It's a mixed bag for banks and finance companies, financials rather. Because banks will be quick to reprice their asset side. The liability side is something that they will take time to reprice. But all in all, it's getting to be a fairly volatile picture out there. Let's look at year to date. Year to date, energy and metal still remain strong. Energy is the strongest, and IT is the weakest. Even though now with the rupee depreciating a bit, it might help. But valuations were already quite stretched in this space. It's the rupee depreciating may not help too much in the near term. With that, let's look at the sector trends. And here there is a lot of changes. Last week we had about 5 or 6 sectors that were up. This week only 2 sectors are up, and those are energy and metals. Besides that, everything else is down. Auto which was up last week, is down now. FMCG, which was up last week, is down now. Media, which is up, and infra also, which was up last week, they're all down now. So we only have 2 sectors in an uptrend and 9 sectors in a downtrend, which tells you, uh, you know, about the market and where we are. So again, you want to get this in your mailbox, just subscribe to our newsletter at factorinvestor.substack.com. With that, let's move on to the topic for the day. What is asset allocation? What is strategic asset allocation, and what is tactical asset allocation? So I spoke a little bit about this while introducing our factor all-weather portfolio. But let me just take it, explain a little bit more, because this is an important decision, and is at the core of how you construct a portfolio more. And it's very important to understand how to construct the portfolio, so that especially in times like these volatile times, is when you don't get put out by these calls, because these are part of the market. The equity is a volatile instrument. So strategic asset allocation is where you set target allocations. The most commonly one in the US and is the 60-40, which is used as an example everywhere of a strategic asset allocation. So let's say you have an asset uh, allocation of 60-40, where 60 is in equities and 40 are in bonds. And after a year, if the market has moved up and your 60% equity allocation has gone to 70 and bond to 30, then what you do is you rebalance your portfolio, bring down the 70 to 60, back to 60, and use those proceeds to take your bond exposure up from 30 to 40. Same thing on the way down. If your equity portion has fallen from 60 to 50, you would sell a part of your bond portfolio and buy more equity. So in this case, you are basically focused on the weight, and that's how you are controlling your risk on a periodic basis. Usually, these rebalances are not done frequently; they're done more strategically over a longer term period. The minimum being a year. So these kind of strategies can be like your core portfolio. What is a tactical asset allocation strategy? And tactical is nothing but another word for market timing. And what I would say is tactical asset allocation helps you to do risk management of your portfolio. So let's say you are a person who can take, say, a 20% drawdown. You don't want to take more drawdown than that. Now, if you were to take a static portfolio of 60-40, or just then you would not, and you say that okay, all you have a kind of a risk budget which is 20%, and if you allocated all your risk budget to your strategic portfolio, you may not be able to allocate a higher amount to equity because you are constrained by your risk budget. Now, with tactical asset allocation, what you can do is, because you know that this is a strategy where you can sidestep tail risk, especially. Let me emphasize that in a sideways choppy market or in a roaring bull market, sometimes this strategy may underperform. But that is not the point of tactical asset allocation. Tactical asset allocation is to sidestep tail events like 2008, like 2020, and if you're able to avoid a 50% drawdown instead of 50% drawdown, you see a 20% drawdown, you're ahead by 30%, and so you can allocate a larger percentage to your equity, and what you can see are you making more returns on your tactical asset allocation vis-a-vis if you had allocated that amount of money to a more defensive asset class like bonds or some other defensive asset class. So that's the main difference. Again, that you rely on certain market timing signals, and you are able to sidestep tail events. That's what tactical asset allocation promises you. Tactical asset allocation does not promise higher returns. It promises lower risk. And core and satellite is a way to implement your strategic and tactical asset allocation. So your core portfolio can comprise of you say that okay, I'm going to rebalance it only once a year or once every 2 years, and let me not touch that come what may. However, you can manage the risk of your total portfolio by adding satellite portfolios to them, and ensuring that your risk is mitigated to a large extent, because you know that that portion will be taken care of by tactical asset allocation. A couple of interesting tactical strategies are MEP Faber's 10-month moving average and Gary Antonacci's dual momentum. Both information on both are available pretty easily. And next week, what I'm going to do is I'm going to take an example, and we will run this on the Indian assets. So Nifty, gold, bonds, liquid funds. We'll see what kind of portfolio combinations, and along with core and satellites, can we make out of combining strategic and tactical asset allocation. Just let's take a look at the factor all weather. So serendipitously, on 1st of May, this model went completely risk off, as we told you in our last video also, last week's video. This went risk off completely on 1st of May. On 4th of May, we got a surprise rate hike by the RBI. Mixed views on that, whether it was ahead or behind the curve and all of that, but what's there is there. I think it's a good step. What it's done is the markets have corrected sharply post that, and so we are in that tactical side of the portfolio. We're completely in gold, so that's where we are going to remain until May end, and when we'll run the model again and see what the model is telling us. So this is something which we still in the process of preparing the dashboard. I hope we are able to get it done this week, and then we'll be able to see that. We'll publish the factor investor report also, so even there you'll be able to see it. So again, the disclaimer is not investment advice, purely for education purposes. Please consult your investment advisor before investing. This is my Twitter handle. This is our Twitter handle, our company's Twitter handle, and this is our website. So if you have any questions, thanks for your questions and feedback. Last week, I did get some remarks on the video that we posted last week. So thank you for those. Few of you liked the concept, and few of you wanted to know a lot more about tactical asset allocation, how to go about doing it. So we'll show you some bit of that next week. And until then, take care and stay safe. Thanks.